And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where the coaches here at Tackle Trading, we go through the markets one step at a time, top-down analysis style, the way that we always do it, the way that we teach it, so that we can better run our daily routines as a community. Welcome out to the show here, guys. Hashtag Team Tackle as you're coming into the channel. Let's keep the chat lively and fun like it always is. Really appreciate you guys as always. Seen a lot of new members here recently, which is always exciting. Don't ever hesitate to ask a question. There's never a bad time to ask a question. Brand new, right off the turnip truck, doesn't matter. We want you to be a part of our community. And if you are new and not done it yet, click that subscribe, click the bell. We do this show each and every day. Markets are kind of mixed here. Industrials are showing a little bit of weakness, while other areas of the market like tech are showing a little bit of strength. Broad markets are holding up pretty well in general, though, in kind of a mixed day in terms of news and market action. We're going to break it all down one step at a time. Before we go too far through these charts, though, Matt, if you can be so kind, go to the Trading Justice website and let's talk a little bit about the podcast we put out yesterday, as well as the huddle. We do a weekly podcast we've been doing since 2014, 7 years, Emily, if you can believe that. Since 2014, called the Trading Justice Podcast. Episode 420 came out yesterday, and I had a chance to sit down with Coach Tyler and discuss his recent newsletter where he wrote a beginner's guide to interest rates. And we had a conversation about how they work and the impact on investors as well as traders alike and consumers, all kinds of different things that were a part of that. I enjoyed the conversation. We played a little game, as we always do on the podcast. We broke the markets down. Maddie, I'll drop the link to the podcast. Talk about it for a second if you can, though.
In the Trading Justice podcast that we release every Monday for our community to kind of discuss that, get people ready for the week that is in the marketplace. We have 3 segments in the Trading Justice podcast. We have the market skyline, then we have a feature presentation, which is typically some strategy conversation or an interview, and then we just kind of have a little bit of a fun game where we like to geek out a little bit at the end of the podcast. And as goes, always have fun doing the skyline and getting yours and Mark's take on what's happening in the market on a bigger picture perspective than we do, say, in the Huddle podcast or obviously here in the halftime report. And I always look forward to those conversations with the traders that come in to the podcast. We've had some absolutely fantastic, fantastic guests out there. But my favorites are honestly when we bring in the coaches of tackle trading like Tyler, and to discuss what they're doing and what they're focusing on and their perspective, and because I've known them for so long and understand how they approach the markets, and I have so much, quite frankly, I have so much respect for what they for their knowledge and their experience that someone like a Tyler Craig, honestly, I just really sat back yesterday. And I wasn't really even part of the conversation. I just sat back and listened to you and Tyler, talk. And I just was really, I learned things. I feel like I know a lot about interest rate policy. I feel like I focus quite a bit of time on trying to understand interest rates, and just listening to Tyler and his perspective based on his experience. It's fascinating when you really get some of those long tail and deep dive type conversations. I loved it. So I hope people really get as much joy and, understanding and knowledge as I did out of you and Tyler's conversation yesterday. And so definitely go and download the Trading Justice podcast, give it a listen this week. And while you're at the Trading Justice website, you can always go to the newsletters and, read Tyler's newsletters, Mark's, and everybody else. Will put out that Trading Justice newsletter for quite some time. It's a free newsletter. And I promise you, that free newsletter is a tremendous amount better than a lot of paid newsletters out there. So definitely give it a try. And then while you're in podcast world, you can definitely go out to the Huddle podcast, which we put out there on a daily basis, and have Coach Tim, and his beautiful little radio voice help you navigate the markets on a daily basis. And once again, that is the Huddle podcast. And I thought your Huddle podcast today was excellent, Tim. Well done.
Team Tackle, I got to ask for a request out there. Matt and myself, and actually our nephew's working with this as well. Some of our team on the back end on a daily basis. Mark and, the coaches, we talk about news. We put this podcast together. If you've not done it yet, give me a subscribe on it. Let's get the word out. Let's get the thing promoted.
Make Tim feel good.
That's right. Let's make Tim happy on a
Let's,
Tuesday.
in fact, Team Tackle, let's go out there and let's give Tim a nice little review on iTunes. Let's make him feel good. He puts a lot of time, a lot of effort, and I got to deal with a lot of his complaints. So let's make him feel good today.
Oh, listen, I enjoy putting it together. I really do. I hope people are getting
You do a
value out of
fantastic
it.
job.
And it's speeding up their daily routine, which is the whole idea behind it. And speaking of daily routine, let's get right into the markets here. Coach Queen, Emily, is here today as well to join us. Emily, how are you doing?
You know, Tim, I'm doing really good. The market is so slow. I decided to cut my hair just so I don't get itchy fingers. So that's what I've been doing. It's just.
I love your haircut.
That forced you to be patient.
I cut my hair just because the market is just doing what it's, just slow, So for cash flow traders, when you can't do anything else other than just, put in your trades and just cash flow and you have those itchy fingers, you have to walk away from the computer. So I cut my hair.
We went to a little league football game on Saturday. My wife and my kids, as well as with my brother here, with his daughter was playing. And my wife looked at my hair and instantly scheduled me a haircut for tomorrow, Emily. So I'm also getting my hair cut tomorrow. It's been about 6-8 months, I believe. So, sitting in my house all the time working, I need to go get that hair trimmed up for the summer. So you do look fantastic, by the way. I'm going to follow you right up with that. Marky, how you doing today, sir?
Listen, Bitcoin's breaking out, oil's holding support, and baseball cards are up. So, my new three favorite things.
Sure. It is the most beautiful chart in the market today, possibly here, Matt. That could easily be a debate. I know Tesla's got a nice breakout as well.
I think my Queen's court pick might challenge that status, but
higher pivot lows into an ascending triangle and a major no-sell candle like this.
And that intraday analysis yesterday was timely. Look at that. Held. The more it held, finally got the breakout. As it reclaims those pivots we talked about. There's one, breaks out of that pivot. There's two, breaks out of that pivot. There's three, breaks out of that pivot. Oh, you got love technical analysis.
I do. Yeah. And it was beautiful. I mean, it was holding that 60 like you broke down yesterday. It's now running here this morning. Anticipation a little bit about the Coinbase IPO, but quite frankly, this has been just pent up chart here for a couple months.
It has nothing to do with Coinbase.
No, I don't think so either.
In fact, I'm offended that simply you put Coinbase into the same version of analysis that I was thinking about.
Is it too early to call him a penguin again like we did yesterday?
Hey, we were going to forget that part.
Wait, who said we were going to forget that?
I did.
Hashtag never forget. Okay, that's what's going to happen on that one. But no, which chart is more beautiful? The recover breakout on Tesla or the ascending triangle breakout on Bitcoin? I don't know. The eye of the beholder on this one, because they are both beautiful.
Yeah, it is sexy. There's no doubt about it. And by the way, we've been watching this one day by day for a very long time, but this has been developing in that regard, Matt. I mean, higher pivot lows, equal pivot highs, intraday pressure, buyers wouldn't get off the fence. And then
what?
Eventually it's
been developing so long, the weekly chart finally gave a beautiful signal.
Yeah. Yeah, which we didn't always get on
time
these
frame
Bitcoin
analysis
ones.
is very strong on Bitcoin right now.
Yeah. And speaking of Coinbase, while we're talking Bitcoin here, the one thing I will say is that tomorrow the IPO is going to happen. It's going to be crazy. I'm not touching it. But I read this morning, their valuation is probably going to come in at about $150 billion on first print tomorrow. And that's on like a couple billion in revenue, I think. So it's going to be interesting to watch.
I'm certain that $100 billion price tag might rival the amount of clicks CNBC tries to get on Coinbase's IPO tomorrow. So we'll see. We'll see which one's more, the actual market valuation, the amount Wall Street tries to push this stock tomorrow.
And I do want to go back to stocks here real quickly. Anything you guys want to talk about with Bitcoin here while we're on the chart? Might as well start right with Bitcoin.
No, I mean, I don't have anything fundamental to say. I don't have anything from a behavior perspective to say, and the technical analysis played out from yesterday. I don't have anything really truly to update from a technical perspective on Bitcoin.
Marky, anything from you?
No, it's just exciting. Listen, I mean, it's just exciting, and the technical pattern leading into it has been very, very pretty. It's going to be interesting to see what happens now, but it's been great price movement. If you're a Bitcoin bull, you cannot complain about price action at all.
No, nobody would listen to you at any point if you're complaining about Bitcoin's price action right now. All right, let's get into stocks here and let's break down the markets one step at a time, starting with the indexes. Obviously, the NASDAQ kind of showing a little bit of strength here today. Some of the high-end news items that we did grab the market's attention, at least, were the Johnson & Johnson news that they were going to have the FDA approval of their vaccine temporarily paused as they review some of the data. We'll get Cody's take on that at some point. In fact, Cody, are you here with us, young man? Yeah. Help us understand this news story. It's everywhere, obviously. And, whenever you have any news headlines around vaccine, people are going to lean in and pay attention. So what do we know, Cody, so far?
So far, the story is that 6 out of 6.8 million people who received the J&J vaccine. And so just to recap on the J&J vaccine, that's the one-dose vaccine that has an 85% efficiency at creating the antibodies within the body. So it does versus the 2-dose of both Pfizer, AstraZeneca, and Moderna vaccines. Not quite up there, but if you can get 1 dose, people are more apt to want to just get that 1 shot versus getting 2. So what basically happened is 6 individuals, 6 women between the ages of 18 and 43, if I remember correctly from the headline, that developed brain clots around a week to 2 weeks after receiving that vaccine. Now, that sounds extremely scary, extremely worrisome when it comes to the vaccine. But when it comes to science and the statistics behind developing something out, 6 out of 6.8 million is a very, very, very small number. And what we need to remember is out of 6.8 million people, how many of them could develop some sort of clotting symptoms just naturally, and it's not related to the vaccine at all. So as of now, with the time between getting the vaccine and the time when symptoms started, it's hard to actually show any type of correlation between those two. But what I do like that the FDA is doing is by pausing this, it shows the scientific community is not taking it lightly. And it shows that they're not pushing something when there could be an issue. So this is both not concerning and also kind of enlightening, the fact that the odds of this happening may not even be vaccine related, because I actually did the math and it's 7 zeros out on percentage of the likelihood of that happening, which could just be direct correlation with normal clotting just in the human population. And then the other fact is that the scientific community is willing to pause on any severe symptoms just to verify if there is a correlation or not and do some side studies before they reopen. Tells me that they're not trying to hide anything. They're not pulling a Boeing, if you will, where they know something's wrong, but they keep pushing anyways. And that, to me, that actually gives me more faith in the FDA and what they're doing and checking these vaccines. And I like what I'm saying on that front. As far as when it's going to, bring the J&J vaccine back up, I don't know. Could be a temporary pause, could be a longer term pause. But some of the other competitors, such as Pfizer, Moderna, they actually saw a little bit of bump in the fact that they might take a little bit more market share. But the J&J vaccine represents less than 5% of vaccines given here in the US. So it's not too concerning. Most people are getting that Moderna and Pfizer vaccine anyways. I think it was less than, the 6.8 million people in the US that have gotten it. And we've given out almost 200 million vaccines already. So very, very small percentage overall of the J&J vaccine to begin with. So as far as all of us who are getting vaccinated and things, not to worry. Even if you opt for the J&J vaccine, I would say not worry. So I think this is kind of a nothing story overall. I think it's just being hyped because any story related to COVID or vaccines in the news kind of gets pushed to the front page. But overall, I think this is a nothing.
The FDA mentioned overly cautious is the quote they used as to why they did this. And they didn't pull the emergency use authorization. What they did is they put it on a pause. They haven't told us how long that pause may be. Obviously, they're going to want more data. You always go first to the healthcare side of it, whoever was impacted by it, and you have your thoughts about that. But I do think, the data around it is interesting. And I personally, I read through the whole thing and I'm like, I am glad they're willing to take caution. I'm glad they're willing to express all this information, relay it to the public, and just communicate with us. So we'll see. I mean, J&J initially gapped down here, but I don't really care about the stock price. On this one, this is more of a human interest story. Matt, any thoughts on this one?
No, I think it's a human interest story, which means we've allocated enough tackle trading time to a human interest story.
Yeah.
You don't trade J&J based on vaccination news. You trade
No.
J&J from everything else that J&J does.
Let's stop with that. You don't trade J&J.
Yeah.
Period. End of sentence.
Yeah,
You-
that's right.
You invest in J&J.
You invest in J&J.
It's one of those companies. But no, I meant what I said, because I mean it's 6 out of 6 million, and it's a statistical irrelevance right now. And so I'm kind of with Cody there, quite frankly, that I honestly think they paused the vaccine just for society. I just think it was to make sure everybody understands we're taking this ultra serious. But I really see this as a human interest story far more than a financial market story.
Yeah.
And it is it's going to cause concern, and it's going to whenever you see those types of headlines in the news, it's going to spark the fear. There's no doubt, because the fear is in the unknown. You know, I mean, the first thing I thought was, oh, my wife got the Johnson & Johnson vaccine. You know, so it does bring those human interests, and it does bring that anxiety, and it brings that fear in things we just don't know. But like I said from the very beginning in this, when Cody's concerned, I'm going to get concerned. And Cody's not concerned,
Nope.
which means I'm not going to get concerned, because Cody is educated and understands these topics far more than I do.
Yeah.
Yep.
Yeah. And it's, first of all, it's very good to have somebody like a Cody on our team here to help us understand this over the last year. So Cody, thank you for the breakdown, the analysis. We do appreciate it. All right. Back on equity markets, if we can, let's talk about just the charts and whatnot. And Matt, just a simple chart read on these indexes, if you can, start with the S&P. Seeing, oh, go ahead.
Oh, no, in terms of the S&P, you were going to say, what were you saying?
Oh, just kind of a hesitation on the S&P. It's the broad-based index, obviously. The NASDAQ is the one showing the strength, which is where we're getting a little pocket of tech strength here today. Russell continues to be stuck in the mud, and the Dow underperforming, as some of the industrial names are also selling off a little bit. But there's not a lot of broad-based price movement here today. We don't have one index up over 1%.
No, yeah. It's that Tuesday, right? We see a lot of boring Tuesdays lately. You get a lot of fireworks on Monday. Get some fireworks on that Sunday futures open. Tuesday is like, all right, now we're bored again. Let's wait till the weekend. Now I kid a little bit, just a doji here, not a lot of price action, not a lot of movement. You're a little overextended. So today's market index, looking at the skyline, we're going to do a little rapid fire style from a technical perspective. We're going to start with the broad markets, market indexes. We're going to move into the sectors very quickly, and we're going to look at this rapid fire style. Now, once again, you're looking at a market right now that is overextended in the short term. You're seeing the market do a little bit of its hesitation at the top end of the range. Like that type of hesitation here, it shows defensive nature in the market. And as long as the market stabilizes, plays defense, i.e. consolidates, it allows these moving averages in the short term to catch up to the market. And then we can reset that technical trigger and trade that breakout. So we're at the beginning of what could be a consolidation range this week. And again, I don't think anybody should be surprised if we see that type of consolidation after this type of movement in the market where you get overextended. And once again, if you struggle with understanding overextended, a very simple indicator is that RSI. And once again, guys, over 70 is technically considered overvalued. We're dinging at 93 here. Not a lot of times in this recovery have we actually that high of a level on your RSI. And from a technical perspective, I certainly do.
Emily, real quick, Matt, hold on.
Yeah, go ahead.
Are we having mic issues here today, Mark?
We are
How bad
getting
are
a little
they?
choppiness.
Enough for me to get you to try to
All
flip
right.
a mic here. Yeah.
Somebody share.
Yeah.
It
No problem.
wasn't screeching, Matt. It was
It doesn't matter. Cody.
He's
Somebody
aware of
share.
it. Yeah. Cody, can you bring your screen up and we'll go through charts there, or Emily, either one of you who are more ready for it right now. And Mark, while we get that screen issue kind of coming back up and working through that issue. But Mark, what's your read on the markets right now? Just broad-based equities.
It is just steady Eddie right now. I mean, that has been a very strong. I mean, Matt pointed out something yesterday, on the runs, like, it's always good to evaluate a stock or the market or whatever's personality. And what is that average run? What is that average run when it has these really good runs before it takes some time off? And we're a little bit above average on an average run. I mean, it wouldn't be surprising at all if you take a breather. But the market, one of the first questions you asked me in our pre-production was, what is your read on the
real
market?
quick, let's get this figured out before we go too far here. Young Tanyan producing, can you give Emily's screen share capabilities for me, please, young man, as well as Cody, so that either one of them can share as needed? And then go ahead, Marky.
No, I mean, you asked me what was my read on the market, and I evaluate so many things from a sentiment and then use technicals as confirmation, and you hear COVID Johnson & Johnson vaccine news, and then you hear a hot inflation report coming in, and the market's just like, this market has really, really strong sentiment. And when these little mini trends within a larger trend, because obviously for the last year, the S&P broad markets have been in this monster uptrend, but within these longer term trends, you got pockets. You got pockets where you'll get little mini corrections. You'll get pockets where things will consolidate, and then you get little pockets where things run. And we've been in that in the last couple of weeks, where you've had a very, very, very strong short-term trend. And if you could highlight in that, this is what Matt was highlighting, some of those runs that we've had, that run at the start of February, right? Nice little run that lasted 8-9 trading sessions. And then that run at the start of March that lasted about 8-9 trading sessions. Ever since we've came off the dip and the breakout, I mean, we've been going strong for, what is this now? Almost 3 weeks. I mean, that has been higher than average. It's been a very strong run within the larger uptrend and within the larger, really nice uptrend since the election. So we're a little overextended right now, right? We've pulled away from some, the 20-day. We've pulled away from the 50-day, and wouldn't it be surprising if we take a little pause? But it was, the type of news you had this morning, when you have, after a really big run, after a really big short-term run, and you have any reason, any excuse, oftentimes you see a lot more short-term profit taking than you did today, where people are like, all right, gonna shore up some profits. You didn't see that. I think that's very, very telling.
Mm-hmm. Emily, what about you? How are you reading the markets right now? I know that you said it's kind of doji and techs breaking out in front of earnings. You didn't like that because they're kind of leaving you a little bit in that regard.
It's kind of like the same thing. I was really looking into getting into tech as we were starting to see that shift there, but we have earnings coming out this week, like you said yesterday in yesterday's huddle, that we're beginning earnings season. We're starting with the banks, and then tech is going to follow soon. But definitely still some opportunity to look for individual stocks that you can still play and maybe do a quick swing trade before earnings really kicks in for technology. That's the sector that I'm really looking at right now. But as far as the S&P, it's it's just dojiing. So if you're a cash flow trader like Mark and I are, it's just cash flow as usual. So really nothing much to see in terms of anything that I'm looking to get into directionally, especially with earnings coming up so soon.
Let's flash through the other three indexes if we can here. The Dow real quick to start. Obviously, a little hesitation there. You got some of those names that are the reopening type names that are down today off of the headlines around the vaccine being halted. I think it did send like the jets lower and some of those other types of names. Industrials are taking it a little bit off there. Still a beautiful trend, though. I mean, we hit an all-time high on Friday, and here we are about the same price we opened on Friday. So a little bit off, at 0.5% off the high there, is 0.6% at this point, but not much I'm seeing there. The Russell 2000, Coach Matt's been talking about this for months, actually, probably since the change in character that started at the beginning of March. Here we are, that we've rolled in to a sideways neutral consolidation range. Coach Emily, you love playing the cash flow stuff of it. Are you now flying both, wings of this condor? Are you playing it fully neutral? How are you approaching the rut these days?
I am on IWM. We still don't have $10 wide spreads on the call side with the deltas that I prefer to trade. So you have to find other ways to be able to play that when it comes to the Russell. So like if we look at the Russell itself, and we look at those contracts here, and we look at the one that we'd be putting on right now would be the June that's coming up, right? So if we just follow, normal standard protocol, you look for a 10 delta or lower. When you get to those 10 deltas, if we were to look at, let's go with this one right here, you've got $50 wide spreads over here. So it's still a little bit impossible to trade the RUT the way I would normally want to. So I'm either having to go to IWM or still putting on, and putting on the full condor on IWM and just doing bull puts on the RUT itself. But until we get the deltas that I like and get those $10 wide spreads, it's still kind of hard and difficult to trade that. With the RUT. But yeah, I would love to put on a full iron condor on the actual RUT itself. I would love to do that.
So the call spreads here at 50 points gets you to go to the ETF version of it, which obviously they have the dollar spread, so you can kind of build it however you choose to. There's a lot more, kind of flexibility in the way that you're approaching it. And the RUT is neutral, and there's not much else to add to that at this point. If you go back to the chart, obviously a lot of those, types of financials, industrials, banks, the regional banks, they're all going to be a component in the RUT. And it's kind of moved into this sideways consolidation. We'll keep watching it. Let's move on to the NASDAQ next. Mark, inflation concerns, CPI report came out today. There was a lot in that to unpack. It's interesting. I don't think anybody should be shocked by the data from the market. We'll talk a little bit about CPI in a minute. But when you have inflation concerns over the last couple of months, it has affected tech in a negative light. The market seems to not be reacting to those kind of headlines. We had a strong PPI report last week. We have a strong CPI report here. When I say strong, I mean above expectations and coming in pretty hot in the short term for inflation. Why is tech so resilient right now, Mark, in your opinion?
Sentiment swings are, impossible to say. This is 100% the reason, right? You had that yield scare, and scare, we use that term loosely. Matt's talked a lot about the actual importance of yields, but, listen, for a short time, yields are going up, people, sell off, things happen, and so yields have went down, but and so it's not, there's never 100%. This is why this area is running right now, and that's why technical analysis is so important. So then when tech breaks out, but man, it is just the sentiment surrounding it. It has just had this feel that tech wants to run, tech wants to run, tech wants to run, and you could say there's a million different variables that go into that. And I don't know how long this run will last, but I do know, and this is why we pay attention to technicals, is that when you had that breakout, what was it, 6, 7, 8 trading sessions ago, when you broke out of that short-term resistance level, it's why technical analysis is so powerful, because we can guess and we can speculate, but when you broke out of that resistance and you started breaking out on it in strength, it was like, all right, we got a breakout. And the one thing from trading is that when you do have a breakout of short-term resistance, don't try to be the smartest person in the room and guess when it's going to end. So you have a resistance, you have a breakout, and breakouts carry with them momentum. And when that momentum gets going, don't ever try to be the one, well, I think it's going to end. No, breakouts are very, very powerful. It's why we use top-down analysis here at Tackle Trading so religiously, if you will, because it gives you signals, and then those signals give you trading decisions. And after that breakout, tech's had a very strong week and a half. And don't try to be the person that says, well, I think it's going to end here, because trends are very, very powerful, and momentum is very, very powerful in trading.
Yeah, I mean, we are up, 10, 11 days in a row, it feels like. Yeah, the one doji kind of stuck there in the middle, but that even had a higher low on the intraday. So it's interesting to look at that. It's had a good stretch. There's no doubt about it, but fighting it against the trend, that's not something I do in my own personal approach. It's not usually very wise. We're now breaking into new highs after, it took a month and a half off there, really. And the whole storyline around interest rates and inflation was kind of holding tech back, but really it was just pausing. And here we are back up near the all-time high. And as you go to the weekly chart, Emily, it always smooths out some of that noise, doesn't it? Yeah,
it does. Looks very pretty on the weekly.
Yeah. All right, let's keep flashing through markets. Let's go to the commodity markets next. Let's go to crude oil if we can. Holding around, it feels like every day crude is at $60 a barrel. I mean, it just does. It just feels like every day lately I'm saying crude at 60, crude at 60.50, crude at 59, crude at 60. It is hanging and holding in here. A little bit of mixed information here, Mark. Obviously, on a day where you had a vaccine headline, you think, okay, crude might have an impact on that because of effect on demand. But OPEC came out and actually increased their consumption demand forecast for 2021 by 190,000 barrels per day. Not a very big bump, quite frankly, but oil is holding here where we are. Weekly chart's interesting. Go back to the daily on this one, though. I do want to take a look at this one because the story is really just the consolidation, Mark, back and forth, back and forth, back and forth between about $57.50 and $62 per barrel. What you read on crude, Mark?
I mean, I think you nailed the story. Is that normally COVID negative headlines impact crude. This one didn't. And in the market, while small caps are selling off a little bit, financial selling off a little bit, that could also be attributed to other things as well. And I don't think the market's taken the Johnson & Johnson story like with any like as an impactful story, to say the least. And crude just is brushing that off. Now we have this larger consolidation pattern that's been developing for 3.5 weeks. Eventually you're going to get a break out of that. But just like you don't try to be the smartest person in the room and trying to guess when a trend's going to end, don't try to guess when a consolidation pattern is going to end either. They can last for a while. I still like crude oil stability. I do think we're going to have a full reopen. I think Europe's going to have a full reopening eventually. I think everything's going to return to some semblance of normal. And that at a minimum, I think provides a stable backdrop for crude oil and hence cash flow plays.
Mm-hmm. Yeah, and that neutrality down here, when Matt has his charts up here, he's got a big line between like 50 and 57. I believe over the long term, even if crude does not hold and stick this range, as long as we move into stability over time, it's going to end up being a very good thing. You got earnings for the major energy companies coming out in a couple of weeks. We'll find out what the profitability of these companies has been, as crude has been much higher in the last quarter. Obviously, as it's had this really, really good stretch for the last 3 months or so. Let's move on to gold next, if we can, Coach M, and the GC contract here, hanging around 1750 an ounce. It hesitated at that pivot high point around that 50 period moving average on the daily. We love the developing price action here. We've been talking about it for about a month and a half. Stuck the pivot lows down there at 1680 or so. Now we're developing higher. The dollar's off a little bit today, and I know Matt spent quite a bit of time looking at the dollar yesterday as to whether it would hold the retracement yet. And if you look at this, that reverse correlation for a day at least, the dollar's not holding that pivot there, Mark. Mark, what you read on these two products?
Oh, listen, you're scraping the bottom barrel when you get me talking about the dollar instead of me going getting food on the dollar. Listen, that's a breakdown of short-term support, right? Is weakness. Matt talked about this yesterday. That little short-term support, couple-day, inter-day, multi-day support that formed. You broke down out of that. It's obviously a bearish day trading signal, but it has significance. It has significance across the whole realm. One of the things that analysts, because I read a lot of material, and a lot of the material, is from all corners of the investing, speculative universe. And so many people, that I read are like, all right, so what could create a bearish problem for the markets? And then they'll do their best guesswork. And time and time again, it's been a strong dollar. So a weakening dollar has positive ramifications throughout the investing world for your bullish trades. At a minimum, it don't hurt, and at a maximum, it can really benefit, specifically precious metals, but stocks and other areas of investing as well. And so weak dollar is good for a lot of your bullish trades. And so this breakdown, not too shabby.
Yeah, obviously, it would be significant if the dollar continues to pressure downwards. And Cody, you do the Forex report over at Tackle Trading on a weekly basis. Some of these pairs are showing us some of that. Quite frankly, Matt looked at them yesterday, but it's interesting to look at some of the cross pairs here. And, the euro dollar, the second biggest currency in the world, euro is strengthening while the dollar is weakening. EUR/USD real quick here, M, if you can.
I think
it's
very nice that I missed the halftime report yesterday, and it's nice to know that Matt basically broke down the same thing I broke down in the Forex report as to whether or not the retracement would hold, and if it didn't, that what we saw, the trade is over. So now we're actually seeing the euro dollar possibly in a reversal where it doesn't look like it wants to break down anymore. This is a interesting pattern that we're seeing. We'll see if that green line, what is that, the 200, Emily, or that yellow line of yours?
That's the 50.
Falling 50. Yeah.
That's the 50. Yeah. So the 50 is in the way. If that breaks on the euro dollar cross pair, the dollar's no longer bullish. It needs to get back into neutral or even bearish territory.
Well, and that kind of all lines up at that 1.2 handle in the most liquid currency pair in the world. So that's one to pay attention to, even if you don't trade Forex. If you're wanting for confirmation, the UUP just on the broad ETF can help you with that. But some of the other cross pairs as well are showing me interesting, strength and weakness. The Swissy is, strengthening against the dollar. So is the CAD. So it's interesting. We'll watch it. We'll keep watching this and see if that pivot does end up holding or not on the USD. We already took a look at Bit. Go ahead.
Quick, if I could. If there are any Forex traders out there that are looking for any trades, the Aussie dollar and the New Zealand dollar, I love them both. One's a low base, one's a bear flag. Very easy signals to trade into either of those. So for my Forex traders out there, watch the Aussie, watch the New Zealand. That's all I got.
AUD, USD. Okay, we'll do. Let's go back to gold though, because I wanted to come to the dollar, have a talk about it because of the way it's impacting the way we think about gold lately. This inverse correlation is real. That's always been real, but it's actually playing itself out pretty nicely.
But sometimes it's more real than others, right? Like, because there's always a general correlation between the price of the dollar and gold, but sometimes it doesn't seem to matter. Today, I think it matters a lot.
Yeah. Dollar breakdown and a gold breakout at 1760 would be pretty nice for gold. It would give it a lot of technical clarity. Obviously, this is a very nice candle here today. Emily, you approach gold long term. I'm guessing I've had conversations with you. Is that right?
Yep, I do.
Yeah, you use it a long-term investing product, which many do, but I think many of us who watch it still are looking at this saying, hey, love to catch breakout here. That would be wonderful for the price of gold. All right, guys, from a broad market perspective, that said, I do want to talk a little bit about that CPI report though, Mark, if we can, before we move into stock talk. And Emily, back on the S&P while we have a discussion about this. Mark, we had a podcast yesterday around inflation concerns, and Tyler even spent some time talking about as inflation expectations for the future creep up. That's where yields creep up and all that kind of stuff. It was a negative headwind for the market. Here today, the CPI numbers came in 0.6% as a rise in March. That's up 6% on a year-over-year basis. And I'm reading those headline numbers. I then dig into the report. I had a conversation with Matt this morning about it as well. Most of the gains here were gains in energy and gasoline prices. Gasoline prices were up big in March, up 9.1%, things like that. But food prices were also up, and that's takeout food, Emily. They had a rise, I believe, about 4% on a month-over-month basis. People going out to eat at Chipotle or whatever it might be, getting that takeout.
I was just gonna say, I'm part of those consumers. My kids get takeout literally every week. So yeah.
Yeah. But even with a 2.6 number, Mark, which we haven't seen for much of the decade, that was the highest, year-over-year gain, I think, since 2018, I believe, maybe even longer than that. I have to go back and get that exact data. But I know it was a big number, one we don't normally see. The market shrugged it off. Do you think the market is accepting the Fed's message right now of this being transitory or being patient or letting it run above 2% for over a year, that they've continued to come out and just give that message in Fed speeches? There's 4 more Fed speeches scheduled today, and I don't think that is accidental, by the way, the day the CPI report comes out.
I joked on Sunday night with our pro members that there were like 4,000 Fed speeches this week, because when I looked at the economic calendar, I was like, there were so many speeches. I was like, I'm not going to list these all because there are literally like dozens and dozens of these, it felt like. So, yeah, they're all out in force this week.
Yeah, they are out in force. I'll get Matt's take on this tomorrow or whatnot with CPI. I was talking to him earlier. It feels like markets are ignoring some of this data recently in the short term, Mark.
The 10-year actually dropped pretty significantly. So those yields actually going down today. So whatever the totality of the news, right, whether it's Johnson & Johnson, CPI, whatever, those yields are going down. And, listen, there's a yield program out there. Gold does well, tech does well on days that the yield goes down a lot. So maybe the market is buying into the general, we're not going to raise interest rates for years dialogue, and inflation is going to be transitory. Listen, the market has a tendency to buy into what they want to hear when they want to go up. And I think that a lot of that's going on right now as well. So there's not a lot of bearish sentiment out there right now.
Not in
There just
short term.
isn't.
No, there's not. Now, obviously we're going to have some new themes emerge as we get into earnings
No,
season.
no, even like I don't want to use the term perma bears, but the writers and the analysts who are always like trying to find what might go wrong. They're all saying, in the summer something could happen, and they list lots of different reasons. But nobody's bearish in April, that's for sure.
Yeah, not right now. And you can see it in the stretch in the overall S&P 500. 1, 2, 3, 4, 5, 10, about 15 days in a row. We've had a good 3-week stretch after that breakout. It's been about 2 weeks, but yeah, good little stretch here on the markets. Let's move into stock talk. Let's have a conversation about some companies here today that are in the news. By the way, if you're out there watching the show right now and you've not yet done it, give me one of those thumbs up. Help us get the analytics out there, get the word out here for our show here on the Halftime Report at Tackle Trading. And if you're a new watcher and not yet subscribed, click subscribe, click the bell, come back and join us on a daily basis. Let's start with GameStop if we can. I asked Matt this question yesterday, and I'm going to ask you guys the same question. Is GameStop in the consciousness for investors here to stay? Mark, as a relevant
GameStop's
company.
always been like a watch list, and maybe it's the old gamer in me, right? Because you create a watch list of 50, 100, 200 stocks, whatever that is. And so GameStop's always been on my watch list because I'm a gamer, right? It's like, why do I like that new MUDs ETF? Because I like baseball cards, and it's a tie to something in me. So I think GameStop, and especially because of the
Wait. What is this MUDs ETF? I don't know anything about this.
The top's MUDs going.
Oh, MUD's not an ETF. Top's going public.
MUDS. Put in MUDS.
But it's not. That's not an ETF, right? That's
the SPAC. Excuse
me. SPAC going public with tops. Yeah.
People like baseball cards, at least for 2 days. But we gravitate towards what we know, right? We gravitate towards what we like, and we can trade anything. But we tend to gravitate towards things. And GameStop, I think, even for non-gamers, I think GameStop has created an art story that people will always check in on it. Now, how many rounds can it go with this? Hey, let's put the hurt to the hedge funds and that whole narrative that you see on message boards. And does it have another parabolic run in it? I don't know. But I think GameStop will have a sentiment place, if nothing else, on a watch list, right? Now, if GameStop goes down to $22, I promise you some of the sentiment memories will not be positive for certain traders. Will not be positive for certain traders because people are fickle, right? When you're making money on a stock, you love that stock. If that stock is hurting you, your sentiment changes quickly. And this is why fundamental analysis and true belief and having a long-term thesis plays out. So, are there more chapters to this current story of GameStop? I don't know.
Well, there's one right now. They're looking for a new CEO. So that might get them a little bit new buzz. Especially depending on who they bring in, longtime CEO is going to be replaced.
Can the actual storyline of GameStop turn into something that is actually positive, that is we actually believe this? Because nobody trades GameStop these days because they think it's worth $138 or that it's $300 or whatever the price might be. That's not what, none of the people that trade GameStop are like, yep, I think fundamentally I have conviction this is a great company at this price. Nobody thinks that. It's a whole meta game that goes on with this stock. So are there more chapters to the story? I don't know. At some price, GameStop becomes a bargain. For me, that price is $15.
Well, they're trying to position themselves as a growth idea as they shift to e-commerce. Obviously, the guy Ryan Cohen, who came over from Chewy, who made a lot of splashes back in January and even December when that news started to hit. He has now been pushing for a CEO change, and he became a member of the board just last week. So these things are all kind of being put into motion. Whether they can convert that into a long-term growth theme or not, Mark, is a very, very long shot from here. We don't know that.
Right? Yeah. Every company is going to say things. Go read any SPAC prospectus. Great things that are going to happen in the next 10, 15, 20 years, right? Every single one of them. You got to see some level of expectations before you take any dive on GameStop that is not
Matt,
really,
we got you
really,
back.
really low. So
Oh, can I just add to that? I was just going to say, you know, as far as GameStop is concerned, news like this of them looking for a new CEO would be a reason for the stock to just go up for no reason. And the fact that that's not happening today, it's kind of like, you know, maybe people have sort of lost interest
well,
in it.
and
But
plus GameStop announced the issuance of new shares that they're going to be, you know, putting some shares in the market. That's not good in this market condition, and probably particularly not good for GameStop.
Maddie?
yeah.
We're talking about GameStop and CEO.
Yeah.
Can somebody tell me the name of the CEO?
We don't know yet. They don't
Okay.
have a new
Looking
one.
for one.
They don't
No,
have a
I'm
new
talking
one
about
yet.
the old one.
I wrote it down.
Exactly, but you can name
I
Ryan
don't.
Cohen.
Yep,
Ryan Cohen's still there, right?
he is.
Then let's stop talking about Nothing Burger.
Nothing burger on GameStop so far.
Unless they want to hire me, I'll bring him up to speak.
They're
Listen,
trying.
I'm a gamer. I love GameStop. I have experience in running an online company. I've taken physical companies, taken them into the online route, and I promise you, I won't make the stupid decisions GameStop has made in the last 20 years to make them a brick and mortar store that has to go online or they threaten bankruptcy. And I like Ryan Cohen, so we're good.
Would you take your pay in options?
No, not a chance.
I probably would want a base compensation.
Stock options would not be part of my bonus package.
All right, next one here. Nvidia was also in the news. This stock has been a juggernaut for so long. They came out with a couple of different news items. Number one, they reaffirmed their revenue guidance, said they're actually coming in higher than their expected revenue that they had put out there for Q1, looking like they're going to beat that number when they do eventually report earnings for Q1. They even came out and said that their revenue projections for that one unit where they make cryptocurrency mining processors that they just announced in the last quarter, they're projecting that to triple, up from 50 million, which is just a small part of Nvidia's revenue on a quarterly basis, up to 150 though. Say that unit is performing well. But they also announced they want to compete kind of directly with Intel and those kind of things, using their firms out there in the UK as a way to put pressure on Intel, allowing them to build chips competitive directly with the way that Intel builds chips. It's an interesting move. It even puts the deal where they were going to buy this ARM technology in the UK under some regulatory scrutiny, possibly, if they're going to be doing this on competition. But Nvidia has been just a juggernaut here. It's now breaking into new highs. I want to get you guys' read on this. I mean, it's taking off. It's on high volume. It's clearly overstretched. Is there anything here besides a watch list? I'm going to start with you, Matt.
Well, I personally, I think Nvidia should be on everybody's watch list all the time for specific setups. It's one of the leaders in one of the hottest areas of the market over the last 20 years. The semiconductor space within technology is hot upon hot type scenarios. So I think Nvidia is one of those companies that we all track. And when you talk to a bunch of they were talking about Bitcoin miners today, they were talking about gamers and their chips and so on and so forth. But when you actually talk to individuals that are gamers or Bitcoin miners or whatnot, they don't like Intel. So why is Nvidia trying to compete with Intel? Quite frankly, I think Nvidia is a better company with a better product than Intel. And so it's almost like they're not even targeting the big dog. They're taking down the big dog, and you got to respect it. I wouldn't want to get in the way of Nvidia. I'll tell you that right now.
No, I would not either. It's absolutely a juggernaut on a performance basis, and
Now,
here we are pushing into all-time highs.
Well, yeah, and I mean the story on Nvidia is not going to be the daily chart here. That's going to be a difficult read, given the fact that you were overextended coming into this type of news, and now you're threatening a breakout. That's a tough momentum read there, and certainly not a standard technical setup. But when you look at Nvidia on a weekly chart, and what you'll see is a wide range neutrality, similar to wide range neutralities that we've seen in Netflix, that we've seen in Chipotle Mexican Grill, that we've seen in Tesla historically, that we've seen in other high flyer type growth based companies. And this type of prolonged consolidation, quite frankly, what it does, it allows the fundamentals enough time to catch up to that rapid price action that happened. And I'm talking specifically to Nvidia, not in general, although in general, this concept does ring true as well. a lot of times when price gets in front of fundamentals, a high base, for example, allows you to reset the technical trigger. A lot of times when the technical trends get so far out above the fundamental analysis from a valuation perspective, what happens a lot of times is people are like, well, I'm going to wait for a crash. I'm going to wait for a crash. I'm going to wait for a crash. And I'm like, you don't want a stock to crash. No, that's you don't want a stock to crash in a bull market. For a stock to crash in a bull market, something fundamentally is wrong with that stock. You want a stock to crash when everything is crashing, because consumer behaviors is what you're analyzing there. And so you don't want a stock to crash in a bull market. What you want is you want that time. You want that time for the fundamentals to catch up, for those longer term moving averages, like the weekly 50, which coincides with the 200 daily. You want those moving averages to creep up over time in a similar capacity that you want 9 EMAs to catch up to daily charts over time. And so as a stock consolidates over a 3, 6, 7, 8, 9 month period, especially after the momentum Nvidia had post-pandemic or during the recovery, it allows those longer term moving averages, which are more fundamentally driven, time to catch up. And then all of a sudden you look at a potential breakout that, yes, is overextended, but absolutely everybody, in my opinion, should be at least paying attention of Nvidia and what is happening above 600 and seeing if it can play some defense above 600. I'm not looking to chase here. I don't think that's wise to chase here, but I do think as Nvidia currently price tag is about 623, as Nvidia navigates that $600 breakout, and again, we've said this many times, Tim, many times in the halftime report. If the breakout is real, it's going to be real in 2 months from now on a weekly chart, the same way it is right now. So I do think we have a little bit of time to be patient. If we miss it, we miss it. But I would rather miss it than chase it, quite frankly. Let it set up. Just one data point, but it did test that 600 level a little bit today, reaffirmed a positive volume supporting it. Let's just see how it navigates and plays defense above 600.
Mm-hmm. So essentially, we love the underlying conditions. We love the long-term time frame as well, the breakout, the news, the catalyst, but we just need a pattern to develop. We need to be patient.
Yeah, like you love the space. I mean, everything
Mm-hmm.
from top down is good here on Nvidia. You love just the NASDAQ right now. It's in favor. Obviously, tech is in favor. Obviously, semiconductors are getting in favor. And so from a top-down approach, yeah, I mean, you're good here on Nvidia. It's just a matter of, all right, if I'm already looking at applied materials, then AMD is kind of my juggernaut. I like cover calls on, do I need an Nvidia? I think that's more the appropriate question than if you want it. The technical analysis is there. You just wait for a clear pattern. The fundamentals on Nvidia is there. It's a fundamentally strong company. You might have some slight concerns about valuation, but those concerns have been dissipated over the last 6, 7, 8 months as Nvidia has consolidated in that time frame. And so, yeah, the analysis is there. The only question for me is, number one, does your portfolio need a trade is a trade? I mean, that's a different conversation. But in terms of portfolio allocation, do you need more allocation in semiconductors? Only the individual can answer that question. If the answer is yes, yeah, I would be comparing Nvidia against some of the other semiconductor stocks right now.
Mm-hmm. Yeah, and that would be the conversation you have to have there. Obviously, if you own AMD, a bunch of others, it's about percentages.
From a trade, chasing the momentum, I don't think is wise in this market. This market is more of a standard, technically driven market than it has been in recent history. And so I wouldn't be chasing overextended dreams of dragons and glory. I wouldn't be doing that. But you could put it on a watch list and see if it does set up in some type of flag, some type of base, some type of bullish retracement. Breakouts out of this type of consolidation in good companies, they're usually good environments to be a trade in over the next few months.
Yeah, absolutely. A couple other quick ones, then we're going to play Queen's Court here in just a minute. AGC, This was a SPAC bit of news here this morning, Mark. The Southeast Asia ride-hailing giant Grab, similar to an Uber or Lyft that you would think of, is going to go public via this SPAC merger with Altimeter Growth, and it's looked to be one of the biggest ever, valued at almost $40 billion. They're going to list under the ticker symbol GRAB. Marky, any interest in this company as they move into the SPAC process?
You know, I know Grab on a cursory level that they exist, their locations. I've started to do some due diligence looking into Grab, see what they're all about as far as financials. Let's see if I see their profitability levels close to Uber or Lyft, I'll stick with Uber or Lyft when I want to make those type trades, but I'm still looking into the due diligence. Be interesting to see if they're any close to profitability, like Uber says they might hit this year, right?
Yeah, they keep hinting at it, but you got some time. The SPAC news is announced. It takes time to even process it. By the time they will be trading on Grab, what is it, usually about a month or two, Mark? These SPAC processes, that how long it usually takes. I just caught the headline. It's a big one, $40 billion potentially. That's a bigger than a lot of the ones I've seen out there, much smaller. All right, and just one or two quick upgrades if we can. FedEx got an upgrade here today, FDX. KeyBank Capital Markets upgraded FedEx to overweight, set and also slapped a price tag at $350 per share. Obviously, industrials have been hot and strong. FedEx has got a nice grindy chart coming back up off of those, that trend reversal that happened in the middle of January. Has been moving towards the highs. It's a tough one here because 305 is your high point here. Matt, do you agree FedEx overweight the industrial sector?
Overweight the industrial sector on FedEx? No, I wouldn't put FedEx in front of the sector. I'd put it in line, and quite frankly, I would put FedEx in line with its industry as well, integrated freight. So they're reading something I'm not here. I have Expeditors in front of FedEx. I have UPS in front of FedEx, and I have JPHT in front of FedEx. So FedEx got a pretty consistent little short-term chart, but you're still intermediate on a trend. You're not outperforming your counterparts literally in the industrial, in your own industry. You're not outperforming your counterparts. How are you putting an overweight against the sector when you're not even overweight against your counterparts in your industry? That's a mistake in my opinion.
Yeah, it seems like a FedEx bias, quite frankly. Nothing wrong with FedEx. I mean, but even
no.
I
Again, when I analyze it's not specific to FedEx. Like you're analyzing your cross comparison FedEx against other charts. Take a look at FedEx versus the industrial chart. You tell me which one you would take.
XLI is much cleaner.
Okay, now do FedEx versus Expeditors, EXPD.
Expeditors been.
You tell me which one you would take.
Beautiful high base.
Okay, now take FedEx versus the potential breakout on UPS when UPS is front running FedEx on its current short-term trend. Okay, so it's not difficult, and I don't know why these people are paid on Wall Street.
Well, they're paid to pitch, I guess. Maybe they're pitching FedEx somehow. FedEx probably.
Listen, and I know there are new people at Tackle Train that are not used to my direct nature. You will get used to my direct nature. But again, you got to call balls and strikes as a trader and as an analyst. And right now, when you're looking at FedEx, it has nothing to do with the quality of the company. It is being outpaced by its counterparts in its industry. The sector is much better than FedEx is. The theme for the sector is much better than FedEx. And so FedEx, I would have under its sector. I would have under its industry. And so it's something I would definitely disagree with. And again, it's the ranking. Right? It's the ranking. If you were to say FedEx is a buy, I would not disagree. I would not disagree. When you say FedEx is overweight against the sector, that's a completely different form of analysis, in my opinion.
Yeah. Yeah, it's got to stand out, right? I mean, it can't just be that the XLI is that beautiful to chart.
If there's 5 stocks in the industry, you can't have all 5 as overweight.
Yeah. Yeah, that seems.
Don't we have to grade on a curve somewhere?
Everybody gets a
everybody
ribbon.
Gets a blue ribbon.
Everybody gets a ribbon.
Okay, Blue Ribbon Tuesday. Everybody gets a blue ribbon.
Blue Ribbon Tuesday doesn't sound too bad, but Taco Tuesday sounds better. I'm cooking tacos tonight. One last one here, and then I got a question from Jeremy. I want to get you guys take up long-term member. The halftime report popped in there. He's always in our Facebook group quite a bit there, Jeremy. So we'll get to that before we get into Queen's Court. Booking, the company, travel company, used to be the Priceline.com. And as a matter of fact, I haven't traded this stock much since it converted its
Since it
ticker
changed
symbol.
its ticker symbol,
Yeah.
PCLN.
I used to trade it all the time.
Booking, that was a mistake.
It was. They got an upgrade as well over at Jefferies to buy from hold based on global travel demand spiking over the next 12 months. They slapped a $2,800 price tag on Booking, and over a 12-month period, I don't necessarily have much of a problem with that price tag. That would be about a $500 increase from here. It would be nice price appreciation, but we're talking 12 months. If you catch a breakout and run, you could get there. Matt, agree, disagree? Mark, you as well. Let's get your take. Booking
Honestly,
holdings.
I agree. I like the breakout potential. I like the consolidation as it's attempting that breakout. You see a little bit of a cup and handle here, but probably more ascending triangle with a fairly clean horizontal trigger. And the $2,800 price ticker, when you're looking at it 2,400, you're like, oh, that's pretty aggressive. That's 400 points. Guys, in its consolidation range, it's 250 points. In its consolidation range on its daily chart, it's 250 points. In its last true leg up, it ran from 1,900 to 2,400, which is 500 points. And so I don't think that's out of the realm, quite frankly, at 2,800. And I do think the consolidation with an increase in support as you attempt that breakout could definitely lead to some really good trading environment. So I don't disagree here.
And then last one here, actually from the chat, Jeremy says, coaches, and give me a PayPal if you can here, Emily. This is an interesting question. Coaches, I'm currently at T1 on a long call on PayPal. Wondering your thoughts on letting it right up to T2 at 300 bucks.
Love this question. The momentum T1 target. Where do we go? Honestly, and who asked the question, Jeremy?
Jeremy Johnson.
Jeremy, that was a fantastic and beautiful question. The appropriate question as you're approaching that target at T1. And remember, whenever you're trading the step system, and I'm assuming this was the breakout of the 50-day moving average in the previous pivot, Jeremy, of the consolidation right around 250. And so T1 would be the previous pivot right there at about 274, 275, somewhere in that range. I would have to be running the chart to give you the exact, but in that range, Jeremy. And so you want to, you obviously, anytime you, let me put it like this. There are three ways you got to make a decision. But at T1, it's a decision. At T2, it's a little more simple. But at T1, you have a decision. And that decision is, do you allow the momentum simply to carry through T1 with an attempt to get into T2? And when you make that decision, you're making that decision truly based on intraday analysis and momentum on the daily chart. And so with PayPal, you have momentum and an increasing volume condition going into target one. And so with that breakout of the 50-day moving average, you currently are overextended as you approach target number one. Pull up RSI if you need. You don't need to do it right now, but if you need, pull up RSI, that will confirm that overextended situation with PayPal. Obviously, the space is also overextended right now. So you do have an overextended environment, no doubt about that. But you don't want to just say it's overextended, so let me lock in profit. Some of those trades you look back on, you allowed to run. You allowed them, like the Fed is allowing inflation to run hot. You allow PayPal or your version of PayPal to run hot, but you make that decision based on the momentum. And as I'm looking at PayPal right now, you had a gap up today as you approach target number one. That is a sign of strength, especially with the gap is happening on the overnight action. And then when you look at the cash open today on that 30-minute chart, you'll see the cash open also got gobbled up. And then the only thing that transpired here is you formed a little bit of profit taking on the intraday, and then that got gobbled up on the intraday analysis. And so you don't have any selling really transpiring here, Jeremy. And because you don't have any selling and you had that gap up on the futures, you had the get gobbled up on the cash open, the intraday analysis is there's nothing to really be concerned about here. It would be absolutely reasonable for a trader to say, let me simply allow PayPal a little bit of room to breathe and see if it truly does want to take off. And you have that analysis to support that decision. Now, that's the first thing you got to decide, is whether or not you simply want to allow it room to run. And I do think the analysis on PayPal leads to that conclusion. However, as a more conservative trader at T1, Gino Poor would say, it's never a bad thing to scale out of the position, though. And so trader number two, so trader number one says, I'm going to allow PayPal a little bit of room to breathe. I'm going to allow it to an opportunity to break out and run, and I'm going to maintain my stop loss underneath an intraday level that is secondary. So if we'll come back down to that 30-minute chart, you wouldn't even put a stop loss above that current pivot on the intraday. You would put a stop loss probably all the way under like 265-ish in that scenario. You want to give it room to run. You want to give it room to run. In scenario number two, where you have more of the conservative trader, circa a Gino Poor at Tackle Trading, who is, I was going to say infamous, but not famous for locking in profit, right? I mean, he will lock in profit to go to a risk-free trade. And the reason he does that, guys, is he wants to ensure that he removes the emotion from the trade by mitigating the risk, and by locking in a portion of the contracts that allows you to lock in the risk, because you're now in a profitable situation. So a trader like Gino Poor would say at T1, I'm going to scale out of the position. I'm going to, let's say we have 4 contracts, hypothetically. I'm going to take 2 contracts off the equation, lock in that profit, while I simultaneously adjust the stop loss to a fairly aggressive stop loss placement. And so you want to scale out of the position, lock in a third, a half, 60%, whatever that number is for you, lock in a portion of the position while you adjust the stop loss to a more aggressive position on that intraday chart. And so for me, coming back down to that 30-minute chart, trader number two, the more cautious conservative trader, would scale out of the position at T1 while adjusting that stop loss most likely underneath 272, maybe 270, if you wanted to give it a little bit of room to breathe. That's trader number two. And then trader number three is the trader that says, I don't care what happens in the future. I got target number one. I'm locking in profit, and I'm going to wait to allow PayPal to set up again, and then I'm going to re-hit it. Now, whether you're the ultra aggressive where you're just going to give it room to run, whether you're in the middle and you're going to scale out and adjust that stop loss, or whether you're the ultra conservative type and you're just going to lock in profit and reassess the situation on the next consolidation breakout, whatever you do, Jeremy, do something, because the only mistake you can make here is to walk away. You got to do something. And when I'm looking at the analysis on PayPal, I certainly would not just walk away from the trade and just lock in profit. And the reason is very simple. You have momentum going into target one. Typically, when you have momentum and the intraday analysis is supporting that analysis, you should allow it a little bit of room to breathe. I love the scaling out approach here. It reduces your risk, it reduces your exposure, but it also reduces the decisions you're going to make from an emotional perspective, because now you've locked in some of the profit. Give the other side of the equation, whether it's 3, 4, 5, 6 contracts, whatever it is, give that a little bit of room with the stop loss under 270. And I hope that detailed answer helped Jeremy navigate this trade.
Yeah, and he's already saying,
Tim,
awesome. Thank you so much for the
will you
analysis.
100% cut that as a video? Because honest to God, Matt, that was textbook teaching and something that, because I answer customer service questions all the time, and I get questions of when do I, all kinds of stuff around that. I want that video to record too, because I thought that broke down the different aspects so well. That was a great teaching moment.
Sure. Yeah, we'll cut it up. I'll put it on social media today for sure. Absolutely. Yeah, very good.
Because I love what Matt said, and just the only thing I have to add to, and that was really good, Matt. I'm glad you came back. Glad that mic. Yeah, we got.
I went and sacrificed another mic.
It's an every Tuesday
it's just
thing.
Consistency. The one thing that, like in my own personal trading, I've learned is that when I face a similar situation, which you will, this is not the only time you're going to see a nice run up into a potential T1 situation, right? It's going to happen a lot to you. I try to do the same thing every time based on my personality and who I am as a trader, and try to get some insight. Like consistency for me is really big. I hate him and Han. Like do one thing one time, the next the thing. Seems like. No. Be
consistent, but again, to me, it's a matter of going through the process and making a decision. As long as you're going through the process and making a decision, you're good by you, and that's good by everybody.
Good. Let's do the last thing we're going to do today here, and actually let's move into the Queen's Court and do another one of these weekly segments where I hopefully don't get my head chopped off. We've been doing this for about a month here, Queen, as you've been coming in here on Tuesdays to join us as our regular guest on Tuesday on the show, where we all bring a trading idea or a candidate or an investing idea, present it to you. You get to be the judge, the jury. Is Mark the executioner, or I'm not sure. I don't want to go there.
No, he just had that one.
Listen, I was tempted to bring Topps baseball cards back today, so my chances of surviving any given week are 50-50.
Mark's is coming in hot. All right, Queen, you are up. You get to decide who goes first.
You were chopped off last week, so I will give you a chance to survive this week. So you go first.
All right. So I was waiting the entire show to decide between a couple of them. I've been staring at the charts, staring at the charts, staring at the charts. I did really like the potential on, let's go with Spotify. I had an easier, simpler pick that may have got me my head secured for certainty, but I'm going to go with a more aggressive type of situation here on spot. What's that earnings, Mark?
I thought we were supposed to bring blue chips.
429.
428.
16 days. All right, I'm good. I can't break my rules there. It was on my chart, so I had to double check. Here's the thing. This type of company in the marketplace has obviously underperformed over the last several months. They're all starting to make a little bit of a comeback. We've seen it with Square. We've seen it with ARK Innovation type fund stocks. We've seen it with Tesla, with these reverting patterns as they're trying to hold. Now, Spotify is a company that I really like. I like the long-term ideals. I like the business. I like what they do. I like their product, their service. This is not an investment idea though here, Quinn. This is a simple trading idea. And the trading idea would be above $300 and above the 50-period moving average on this reversal pattern. You've got that line right there drawn. Pivot relationships, we had the pressure, in the month of February, came down to a low at 260, went back up 285, down to 250 or so, right in there, 249 it looks like. Then we came back up with, that change in character, that change in momentum. And I love today's candlestick on, pretty much a no sell day right here out the gate, pushing towards that resistance. Breakout idea on a company I know you track, Spotify, my queen.
This should be an easy one for you. I already have the lines drawn, so I'm already looking into it. So I love it for a trade. I'm obviously also a long-term investor in it, but I definitely absolutely love this. Once it breaks that 300, significant whole number right in line with the 50, old support back. If we go back and look, it's, this has been a resistance point here, definitely looking to see if it will break that. So I like it for a trade. Obviously, if it's a trade, we're not going to hold it through earnings. So we've got
16
2
days.
weeks. Mm-hmm. So yeah, we're good with that for a trade.
You also have a potential to trigger a little bit more aggressively. If you're not concerned about the 50 MA, you could do it at 290, which would significantly help reward to risk, which would need to be mapped out, by the way. If your T1 is over there on those old support points, that noise to the left at 310 or so, you might want to trigger literally above these ranges on the candle here too as well. So there's some trickiness from trigger entry to T1. I know that, but I know pattern wise alone and the company alone, I believe you will like this one. Am I just playing into your biases here?
You survive. I like it.
All right, very good. That's all I cared about.
Can I go next?
Yes.
Okay. So Tim survives on Spotify, correct?
Uh-huh.
Okay. I'm going to choose Tesla.
I knew you would.
And not only am I going to survive, but I'm going to survive while you simultaneously go back and chop Tim's head off. And the reason I say that is if you're looking at Spotify and you're looking at Tesla, both run on the same type of theme. They're both disruptive innovation. They're both Cathie Wood darlings in ARK. Cathie Wood has, I believe, 3.6% allocated in Spotify. Cathie Wood has 10% allocated in Tesla. So they both run on the same theme. Now, I've been analyzing Tesla in the halftime report for the last couple weeks, and I've been saying the reason I like this is because not only the consistency of Tesla's chart, but because Tesla is actually front running the ARK Innovation Index. It's the leader of the bunch. And if you'll look at ARK very quickly, ARKK, if you'll look at ARK very quickly, you'll see a market that has double bottomed at the 200-day moving average, that has formed a pivot point above the 50-day moving average, breaking out, your 20, we got to fix your colors here. Yes, we do. The only one that's accurate is pink. But the breaking up above the 20-day moving average and is confirming above that pivot, but you're still fairly significantly underneath that 131 50-day moving average. Now, looking at Tesla very quickly, you'll see a stock that formed a support level higher above the 200-day moving average than ARK did. You'll see a stock that formed a pivot point very similar to ARK at that 20-day moving average. But unlike ARK today that is still trying to play defense, Tesla is breaking out of its horizontal resistance level, reclaiming that 50-day moving average, and on the backs of a report that saw Tesla deliver in the first quarter. Now, we won't see the earnings for a few weeks, but we do get vehicle deliveries before that. Delivered in the first quarter, 184,800 vehicles. That is up a whopping 109% from the first quarter before the pandemic. That is also 2.3% better than what they delivered in the fourth quarter after the pandemic, which is obviously both bullish. Now, coming back to Spotify, when you're looking at Spotify, you're going to see a stock that is lagging the area of influence that this stock is in, i.e. disruptive innovation, i.e. the ARK Innovation Fund. And so my pick for Queen's Court is a stock that is similar to Spotify, but is front running Spotify, which means if Spotify works, it's on the backs of Tesla.
Oh, that's a very good argument there, Matt. And I like it. And your mic did go out today, but it didn't go out while you're doing your analysis on Tesla. So I will save you.
Part of my head not getting cut off.
It was an automatic cut off. By the way, my lord, your head staying on does not mean mine has to come off.
Right.
I play Queen's Court like they played in the Renaissance.
I could have taken Tesla. I was first.
I love them both. Obviously, these are both that I always play all the time. So I have no bad opinion on either one of them. They're both good for me. Let's just see what Mr. Spack over there has to provide and see if he survives.
Listen,
Mr. Spack.
I do believe, Queen, that they were informed informing you what you should do when I know that it is you who make the decisions and I am your lowly, humble servant. And while they're fighting it out with Kathy Woodstocks, which I like, I'm going to give you something nice, simple dividend company in an area of the market that has done very well. Like in the falling yields, you have not seen a sell-off in financials. You've seen many companies strengthen in that. And if those yields go up later this year, which everyone is expecting that they will, financials are going to have a really good year. And Queen, all roads lead to you. And all states lead to you. And all countries lead to you. So give me some Allstate, ALL, if you will. Allstate has made a boatload of money in the pandemic, huge, massive earnings. They recently raised their dividend. And we are seeing a nice higher lows develop, clean breakout signal. It's one of those things in an area and in a company that I really, really, really like. And sometimes I feel like this might be the last chance to get in at this price. This is what I feel like right now in Allstate. A lot of insurance companies are set up. Fundamentals are great, increasing dividends for that extra cash flow, reasonably behaved, nice, solid technical pattern breaking out here. Plenty of room to run. I present you Allstate, my all queen.
Nice play with Allstate. You definitely want to be in good hands with Allstate. So you want to be in good hands with me so I don't chop your head off today. Is that what it is?
Yes.
I like the play. I like that breakout. Earnings is further out than the other two, that Spotify and Tesla. So got enough time to even do a cash flow trade on this one here. And that weekly is not looking pretty bad. So, and it's not a SPAC. So I will spare you this week as well.
I feel like you really wanted to kill me.
I did.
He really wanted to kill me. I had to.
Honestly, I think she came into this wanting to kill you, but you can't kill that ascending breakout. Like you can't kill the ascending breakout.
On an insurance company.
On an insurance company.
Beautiful.
Those ascending breakouts. And Matt, will you break down the ascending breakout? I mean,
the ascending breakout is a very simple technical consolidation,
and they've been money in the market lately.
And it's the twin sister of the cup and handle. In fact, it's just the extension of the cup and handle. The cup and handle is a horizontal resistance with a cup handle. The handle is an increasing support level from the cup. You had the cup and handle in Allstate. However, do you see the third data point that sees a downward movement in price? That creates the ascending triangle. And so the difference between a cup and a handle is, honestly, if it was a cup and a handle, it would have broke out last week because it continued to show an increase in support, continued to show a horizontal resistance level. It creates an ascending triangle, which puts a tremendous amount of pressure on the resistance breakout. And in my opinion, the ascending breakout, outside of a high base in momentum, that's my favorite technical momentum breakout. But outside of that, the ascending triangle breakout is my favorite breakout out of all of the bullish continuation patterns.
Queen, 3 of us have all survived this week. We appreciate it. We appreciate your graciousness. There was one question I want to throw to Matt from the chat on Tesla.
Should we talk about my last week when we talked about, or my last 3, Activision? Should we go look at my last 3? Is that what you want to do? Let's go look at Activision.
We could crow.
Let's go look at Activision a little bit. Just go look at Activision.
We could crow.
Okay, Activision looking sexy. What about a couple weeks ago when I brought you Facebook?
I remember Facebook.
When I brought you Facebook.
Oh, how about my Microsoft?
Wait. No, Microsoft was. What are you doing? That was that was 3 weeks ago. Microsoft. Man, Queen's Court has been a winner.
You could have bought Facebook again today.
Yeah.
Oh, Facebook's setting up for another retrigger.
Yeah.
Now, real quick on the Tesla trade, though, Matt Majid, who is a long-term halftime crew member, says, isn't it too late to get into Tesla, Matt?
It's first day on the confirmation breakout. No.
Yeah, it's not too late, Majid.
No.
First day above the resistance zone after it took a $900 to, and I don't know what the Fibonacci retracement of that is, down to 537.
Whoa. Did you talk Fibonacci?
I did.
Tim,
Oh
my
Tim
God.
opened the door.
Dad,
Wait a
No.
second.
Hey, the Queen Court is not done.
are you trying to get
still
our heads
die.
chopped off?
You
Okay.
could-
Stop.
Don't you mention the F word with the Queen. You are going to die. I will literally go back and kill all of you all if you mention the Fibonacci.
Fibonacci. Okay.
I mean, doesn't Tesla feel a lot like the Qs did and NASDAQ did 8-9 days ago? You know,
Yeah, and it almost feels like we're going to stop front running tech and we're going to come back into ARC over the next week.
Yeah.
I mean, that pattern just feels so much like the Qs did about 8 trading sessions ago. So no,
Sure.
you're not too late.
Yeah. All right, guys, that's our show here for a Tuesday. As always, Emily, thank you for being here and thank you for keeping our heads intact, for another round of the Queen's Court. Queen's Court has been absolutely on fire the last month, by the way. If you go back and look at some of the analysis, we did some of those picks. They've been
They have been
juggernauts.
fun.
Final thoughts, guys. Mark, anything for the team out there? What do we got programming wise? What do they need to be aware of? All that good
Tuesday
stuff.
night, coaches show. I got Greg and Gino on, and they're going to do a discussion on defensive strategies surrounding earnings season. I've been saying this for a long time internally with our pro members. This is going to be an interesting earnings season, and you don't quite know what to expect. And so it's good to think through your decisions beforehand. So we're going to do a lot of content in our coaches show for the next couple of weeks on earnings. We're going to talk about defensive strategies. We might get into gaps, how to play earnings after the gaps. But we got Gino on tonight. We got Greg to really, between them, decades and decades of experience. They've seen, oh my goodness, how many earnings seasons between them? 1,000. I got two good coaches for you tonight. Coaches show tonight, 8:30 Eastern. Going to cover lots of stuff surrounding earnings.
Swin is saying, Mark, it was well presented by you. It wasn't the stock or the pick. It was just that you were so reverent in your delivery as to why the Queen granted you some shots
I'm
fired.
an old gambler. I know when I'm in trouble, and I know when I have to,
Step it up a little bit.
Yeah, no, I felt like there was blood to be spilled, and I didn't want to.
Yeah, I wanted to. I wanted
Could he
to really
could he
bad.
have went further away from his SPAC?
Oh, it was
It was
so
almost
far.
like Mark's trying to rebrand here.
Conscientious.
I'm bringing value today.
We're going to go dividend paying insurance companies on a
Yeah.
beautiful trend. Absolutely.
In
I'm
good
gonna go.
hands.
I'm gonna get that blue check type stock. I am making sure. Yeah, I like it, Mark. It was great.
Maddie, any final thoughts from you, sir?
No, I'm good.
Tomorrow morning, JP Morgan.
Trade Just Podcast.
Oh, definitely listen.
Trade Just Podcast.
JP Morgan, Wells Fargo, Goldman Sachs all report in the morning. I have a feeling I know what the conversation will be tomorrow during the show. Come back and join us as we analyze these earnings reports as we start the
Fireworks
season.
tomorrow.
A little bit of action at
Yeah.
least. Here we go. All right, guys, we're out for a Tuesday. As always, if you've not done it yet, give me a thumbs up on the show. Help us get the word out. Subscribe, click the bell, come back and join us on a daily basis. And if you are not yet a pro member of our community, 15-day trial to the pro membership in the description of every one of our YouTube videos.